Hi everybody, Bob Iaccino from the Stock Think Tank, along with Mike Arnold. We are co-portfolio managers, and this is your weekly update video, which is quite a few days late as I look at the calendar. I didn't do one last week, was just too busy to get to it. And then this week, well, we had the holiday on Monday, which is normally when I do it. And then yesterday, again, got busy. And you might think, since it's been basically a full, here, let's count them. 1, 2, 3, 4, 5, 6 working days, 6 business days since you've gotten an alert that had a stock for you to buy, or since we sold out of something. It's been 12 actual calendar days, but 6 stock market working days since you've gotten one. And that will happen on occasion with this product because we don't chase things, and things have gone parabolic. As active as January was toward the end of the month, toward the downside for stocks, February, right now I'm talking to you after 2 down days for the NASDAQ, February right now, at least for the NASDAQ, is the best month of 2021 so far, and the best month since November of 2020 in terms of the gains. So as we outperformed the S&P by quite a bit last month, we're likely to underperform it this month, unless of course things go down, and we've got 4 open core positions and 1 special play, although that 1 special play, PSLV, which is the Sprott Silver Trust, is likely to do well if the stock market were to collapse. We're likely to get hit on those. Now, some of those we've got trailing stops already working. For example, the initial stop on Canadian Pacific has been moved up. The initial stop on Aflac has been moved up. The initial stop on Chase Corp has been moved up. The only one where we still got the initial stop in place is healthcare services. So every other stock right now, we've already cut the risk on. So we would likely get hurt less than the S&P would if there was a sell-off in toward the end of the month. We're hoping there isn't, but we're probably going to underperform. If you count the trades that we closed out, we made about 2% or so-ish to the good side. And as I mentioned, well, that's actually, I'm going to find out what the S&P actually is up this month so I can be a little bit more accurate. Again, I'm talking to you from my trading desk, which normally I don't do that. I talk to you from some pretty background, but talking from the trading desk, I think, illustrates just kind of how crazy it has been for me in terms of working and trying to find actual trades for you guys to take part in. Now, again, we're never going to push a trade, never. Not just out of nowhere, not for any, just to do a trade. That's never going to happen. The one thing I want to talk about from a macroeconomic perspective is what's going on with yields, because we saw yields rise dramatically over the last few days. They've actually risen since the beginning of the year. Let's just take the 10-year, for example. Since the beginning of the year, it's risen all the way up over 131. We're at 1-year highs in terms of the yield on the 10-year Treasury. We're at 1-year highs. If you look at it where it was at the beginning of the month, 10-year Treasury started out at 109. They reached about 133 overnight tonight. 30-year 184. They reached about 208 overnight this past evening. Those things mean that some of the stocks that we look at should do better. Honestly, that's what it should do. From a perspective of that, it's because some of the higher flying companies, the momentum stocks, tech, some of the stocks in the Russell tend to have higher debt. When those debt servicing costs go up, their profitability goes down. Generally, their stocks go down. The other thing I would point to is that individuals spend less when their debt service in their households go up. So stocks that are consumer staples, or things like an Aflac, for example, where you're going to pay that every month no matter what if you have a product from Aflac, those things don't suffer as much. So when you see interest rates going up, it's the high flyers that tend to suffer. Let's see. Right now, I'm looking at a monthly gain of about 6% for the SPY. That's going to beat us. We had a 6% lead as of last month. So we're likely to still be beating the S&P at the end of this month, depending on how it turns out. So that's the update. Watch these yields. I've been talking about the yields. It seems a little esoteric to some people to talk about yields, but it's important, and you're seeing it in what's happening in the equity markets the last couple of days. I will talk to you guys next week. Cheers, everybody.